When you apply for a home loan, you can either get a pre-approval or a pre-qualification. Which one is better and which one should you choose? And which one could actually get you in trouble? Let's find out. First, a pre-approval is an entire check of your full file and documents before you actually find a house. The lender collects things like pay stubs, W-2s, bank statements, and even your tax returns if you're self-employed. Your loan officer submits your full file to the underwriting team, which gives you an approval or denial based on that package of documents. Now, when you find a house, you know you're approved. All you have to do is submit your property information. With a pre-qualification, the lender pulls your credit but relies on only what you tell them to get you approved. You state your income, how much you have in the bank, and other details, and sometimes you can get that pre-qualification the same day, which is the attraction of this approval type. But here's where pre-qualification can get you in trouble sometimes because lenders see things differently than you do in your daily life. For example, you make $100,000 a year in your self-employed business, and that's what you tell the lender, and the lender uses that as basis of the pre-qualification. But what they don't find out until later is that you write off $40,000 a year in expenses. So to the lender, you actually only make $60,000 a year. And not only that, but the tax returns the year before shows that you only made $30,000 after expenses. So now averaging those 2 years, the lender is only going to use about $45,000 a year to qualify you instead of the $100,000 that you thought. So then you get your hopes up on a home that you might not be able to qualify for. This is one of the hundreds of mishaps that can happen if you're just telling your lender about your situation instead of submitting documents. So is there ever a situation where you might use a pre-qualification? Sure, if you have a very vanilla inside the box scenario, like you're a W-2 employee, no side gigs, no weird deposits in your bank statements, anything like that, then it could possibly work. Another situation is if you weren't in the housing market, but something came up that you really want to jump on, you might have to get on the phone with the lender and get a pre-qualification that day and submit an offer. You may not be able to wait the 1 or 2 weeks it takes to get a full pre-approval. But if you start the process well in advance, which you should, there's no reason not to get that full pre-approval. It's going to make your offer a lot stronger and you're going to be able to submit offers to sellers with a lot more confidence.